Hi guys, welcome to my channel. So before we get started, hit that like button and subscribe to my channel. In this video, we will talk about how to cancel debt. So make sure to watch the full video. If you've succeeded in getting a debt discharged or forgiven, you may need to report the cancelled amount as income on your tax return. Know what to expect so you don't end up with a huge tax bill. What is cancellation of debt? Debt cancellation happens when a lender forgives or discharges some or all of a debt that you owe. The process typically doesn't affect your credit score unless it happens in bankruptcy, but it could end up costing you. Debt cancellation typically happens in accordance with a debt forgiveness program. For example, the U.S. Department of Education offers income-driven repayment plans to federal student loan borrowers. If you get on one of these plans, your repayment term will last 20 or 25 years, after which any remaining debt is forgiven. Debt relief programs. Debt relief and settlement companies are available across the nation to help with debt forgiveness. Working with a credit counseling resource, such as the National Foundation for Credit Counselors, can help a borrower identify an appropriate program for their situation. Debt settlement companies are for-profit entities that work on behalf of a borrower to negotiate a debt settlement with creditors. There are numerous caveats to working with these companies, and the process for settlement can take years. However, debt settlement can be an option for borrowers who have been steadily delinquent in payments. Debt settlement companies will assess a borrower's entire credit profile and contact creditors directly on a borrower's behalf for debt forgiveness. Debt relief programs will usually request that borrowers stop payments on their monthly credit bills in order to increase the likelihood that a creditor will settle. Generally, most companies will also require clients to make monthly escrow payments toward a lump sum settlement, which would be paid at some time in the future. Bankruptcy. In many situations, bankruptcy may be the best option for a distressed borrower. In bankruptcy, the borrower has the support of an attorney and the courts. Debt forgiveness is also not considered income in bankruptcy, which can help save tax liabilities. Bankruptcy is a complicated process and the impacts can be long-standing. It's worth speaking to accountants and lawyers before heading down this path. What is a debt settlement? Debt settlement is a way to cancel some of your debts by offering a lump sum payment to a creditor in exchange for a portion of the outstanding balance being forgiven. Typical debt settlement offers range from 10% to 50% of what is owed. Does debt cancellation impact your credit score? Debt cancellation typically doesn't affect your credit score unless it is the result of bankruptcy. What kinds of debts can I report on 1099-C? Lenders report various types of debt cancellation and forgiveness on Form 1099-C, including those related to foreclosure repossession, the return of property to a lender, abandonment of secured property, loan modification on principal residences, the resolution of credit card debts, and student loan forgiveness for those on income-driven repayment plans. Win up to $10,000 while trading digital assets. Digital asset trading just got easier. With OKX, a leading digital asset financial service provider, you can access world-class security as you trade and store assets. What's more, you can win a mystery box worth up to $10,000 when you complete a deposit of more than $50 through a crypto purchase or top-up within 30 days of registration. How does cancelled debt affect taxes? The IRS considers most forms of forgiven, cancelled or settled debt as income for tax purposes. If the amount of your cancelled debt is more than $600 and it's considered taxable, the lender is required to send you a 1099-C form, which includes the cancelled amount that you'll need to report. If your forgiven debt is less than $600, you might not get a 1099-C, but you'll still need to report it on your tax return. Depending on how much debt has been discharged and your current tax situation, a cancelled debt could result in a massive tax bill. So if you've recently taken advantage of a debt forgiveness program, you'll want to find out whether it's taxable and how to prepare, so you don't get blindsided at tax time. Is all cancelled or forgiven debt taxable? While most cancelled debts are considered taxable, there are a few exceptions to the rule. If your situation falls under one of these categories, you might still need to report the debt, but it won't be counted towards your gross income. The difference between cancelled debt and debt settlement. Having a debt cancelled or forgiven is a little different than settling a debt for less than what you owe. While debt forgiveness typically happens as part of a specific program, debt settlement often occurs when you're struggling to pay what you owe and are behind on payments. Also, debt settlement is typically only available for unsecured debts, including credit cards and personal loans. In a debt settlement situation, your credit might already be in bad shape, and settling can damage your credit even more. On the flip side, debt cancellation typically doesn't have a negative impact on your credit score. In either case, though, you may need to report the debt as income on your tax return. If it's taxable, be prepared. If you've taken advantage of a debt forgiveness program, the sooner you find out about the tax implications, the better. Speak with a tax professional to find out whether you qualify for an exception. If you do, you don't need to do anything else. If you don't, however, you may need to start preparing for the tax bill. A tax professional can help you run the numbers based on how much you currently have withheld from your paychecks and which deductions and credits you qualify for. If you end up owing money, start working on a savings plan now to ensure you can afford to pay it. While the IRS offers installment plans for people who can't afford to pay by the due date, they charge interest and a penalty until you pay in full. What do you think of our video? Let me know in the comment section below. If you enjoyed this video, make sure to hit that like button. Also, subscribe to our channel before you go. Thank you for watching.